The following is a presentation of TFNN. The Power Trading Hour with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
And welcome all to another exciting edition of the Power Trading Hour with me, your humble, lovable, and squeezably soft host. Once more, into the breach do we go, dear friends.
The following takes place between 2 p.m. and 3 p.m.
So what do we have happening today? Well, certainly the S&P's off about 21. We'll discuss at least the surface reason why, but I was expecting it. I added a short position yesterday and 3 this morning in various newsletter. One a little early on the first one, and got stopped out this morning. But only had one. I added the other 3 this morning, and they are all looking good. Again, you're not going to make that much money in a day, but I like all the way the positions I got, and some of them are actually doing fairly good. We'll see if they close below a day or even lower and see what's happening. I will tell you why, but I'm going to tease you why I actually went it short. There were 2 things, but I kind of had been working on something for a while and got it done about 10 o'clock last night because I knew I wanted the answers. So I got that done. We're going to show that off. Not everything's done on it, but I think it's going to give you a good idea. You've seen it before, but it's come back a second time after I had to change data providers. So we'll talk about that. But, we're off 20 points, bouncing around. Now we're off 17. But I really disliked the volume yesterday. I think we were doing about 1.8 billion shares in the New York Consolidated tape when we hit and started the show. The volume did come in a little bit better. A lot of volume at the very end of the day. But we're doing about 400 million more on the New York Consolidated tape. If we look at the consolidated CBO equities market volume, that's about 4.2 billion shares so far today. And that compares to, 6.9 billion shares by the end of the day. But, we were doing 12 billion. Now we're doing 6.5. You're just going to get up to a point where a lot of people want to get their cash back, and there are going to be some fairly vicious sellers at these levels or just above that we saw in the last couple of days. There's also some stocks on my naughty list, and we'll talk about why they're naughty. I once went into a restaurant and got a baked potato. It was cold and it was old. And so I told the waitress, I said, my baked potato is bad. She picked it up and she took her hand and she spanked it 3 times hard. She goes, it won't be bad anymore. I always like that. But of course, we can't spank the markets and make them better. But we can let them do their job, which is to pull back, let a few people out. I'm going to show you why I suspect that we're headed back down to 2,700 over the next couple of weeks. And it may take a while, may be a long projected battle, but there's more than enough evidence to suggest that we've hit some minor highs and that we're going to pull back into the mid part of March. So we'll do that. And what else is going to happen? Well, a little bit of this, a little bit of that, and a little bit of history.
And it's all just a little bit of history repeating.
No, I didn't tell her I was bad too. Thank you, Danny. Okay, so what do we have going on today? Well, in 1827, a group of masked and costumed students danced through the streets of New Orleans in 1827, marking the beginning of the city's famous Mardi Gras celebration. Through the early French settlers brought the tradition of Mardi Gras to Louisiana. At the end of the 17th century, Spanish governors of the province banned the celebrations. After Louisiana became part of the United States in 1903, New Orleans, the people there, the New Orleaners, managed to convince the city council to lift the ban, and it's been a wonderful party and place to throw up since then. And I can remember a few things. Went a lot of conventions in New Orleans. In fact, I went to my first SIGGRAPH, which is a computer animation. Yeah, computer animation convention there. And I want to say, God, it had to be what, 1987, 1988. Really set me on the road to working on special effects and animations. I remember that, though, fairly succinctly, because I went down to Bourbon Street, and this is kind of the height of AIDS. And one half of if you looked at all the blocks down there, half of I guess the previous year, half the blocks were set aside or were kind of bars for gays. And it hit them so hard that all of the bars on one half of the street had been closed. And it was a dark time down there. I remember that. So that must have been 88 then, right? Thinking so. Anyway, that always stuck with me. Went back a few years and everything was reopened. But it was always a weird time then. Anyway, in 1827, the party started, and the throw-ups probably starting, and the heaving started probably, what, an hour later? Probably. Did you buy fresh crawfish? I fly. I don't drive anywhere. We got to fly. No. I've got another one I can tell, but I'd have to figure a way to clean it up to tell it. But it involves the waitress bringing my soup, and she had her thumb in it. But we'll have to figure out a clean version of that to tell later. Okay, so what else do we have going on? Well, it is time to say, here comes the judge.
Hear ye! Hear ye! The court's in session. The court's in session now. Here come the judge. Here come the judge.
Here comes the judge. Here comes the judge. Here comes the judge. Here comes the judge.
Oh, don't be disappointed. That was the Shorty Long version, not to be confused with the Pig Meat Markham version of Here Comes the Judge, 1968. Both those songs came out within 2 weeks of each other, all, of course, inspired by Laugh-In. But the Pig Meat Markham version of it, not as good. But still, both of them charted in those 2 weeks. Okay, so what do we have? The Supreme Court had heard arguments today. I tried to stream the court case, or at least the questions, to see which way they're leaning. A lot of times you can tell what the Supreme Court is thinking about. We'll talk more about this when we come back.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
It's a special month at TFNN, and with market volatility back, we've decided to hold an open house in our Tiger's Den. For this month only, you can get a full 30 days of Tiger's Den membership without paying anything. The Tiger's Den is our interactive chat room where you can chat with other tigers and tigresses along with the TFNN hosts during each of their programs. For all of the details and to start your 30-day free trial to the Tiger's Den today, visit the front page of TFNN.com before this deal is gone.
Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
And we're back. Anyway, in the Supreme Court today, they heard arguments, Microsoft versus the United States government, who basically is saying that they can force Microsoft in another country to do something, i.e. give up email records. It's kind of interesting because I can see both sides of it. The downside is what would happen to our U.S. companies if they're thought of as nothing but tools of a U.S. government. They could incorporate a company there, but most of the arguments, I read at least a little bit of the transcript, the arguments are that since they could recover the emails in the U.S., that it didn't apply and they didn't like the Microsoft argument. So the question would be whether or not Microsoft just changes everything so that there's no way for them to actually recover them in the U.S. So there may be, I'm following the logic of the argument, there may be a way for Microsoft to comply in this case, but in the future say, hey, you know what? We've got no ability to recover the documents here in the United States. We'd have to get somebody over there to do it. And that may be the Sophie's choice on why these things are doing what they're doing. Microsoft's still looking okay, so it didn't look like there was that much thing. I have a feeling that many more U.S. companies would be dramatically more impacted than Microsoft. Let's go ahead and pull up a chart of Microsoft, but it's getting right back up into its resistance levels. I think eventually this thing's going to make it to $100, but it's been problematic. Come on. I know I've got internet issues today. Come on. Gonna do something here? Okay. Let's go ahead and relaunch this. Okay. MSFT. Okay. You're back up into the previous 96.07 high from February 1st. Had 48.6 million shares. Yesterday, you had 30 million shares. Today, you got about 16 million shares as it pulls off. One of the things I kind of dislike here is, let's get that off there, is just how light a volume, even yesterday, this is attacking the previous high. So this is kind of like almost all the market. It didn't break that 96.07 high. You may get one more or two more days out here, but if this thing breaks 96.07 and then pulls back, I think you could get back to like 92 bucks on this thing, and it may just consolidate. In fact, I think a great deal of these stocks all set up for some kind of consolidation. No massive pullback, but there were just so many of them when I was looking at options last night that I thought it was a big issue. Now, why did the market kind of really take off a little bit after 10 this morning? Well, our new Fed chief, Mr. Powell, got into a discussion of the Volcker rule, and the longer he talked, the more the people started feeling a little nervous. He was basically kind of started off a little lukewarm, then went to actually good and warm to actual toasty on revisiting the Paul Volcker rule. The Volcker rule, for those people that don't remember the 80s, for a variety of reasons, is really part of the Dodd-Frank Wall Street Reform and Consumer Protection Act, originally proposed by Chairman Paul Volcker to restrict United States banks from making certain kinds of speculative investments that do not benefit their customers. Volcker argued that such speculation actively played a key role in the financial crisis of 2007 to 10. The rule is often referred to as a ban on proprietary trading by commercial banks, where deposits are used to trade on the bank's own accounts, i.e. they're borrowing the money from you for free. But not only were they doing the trades, they were actually using it against their own customers. And probably a pretty good rule. Short of Glass-Steagall, not a flock of seagulls, Glass-Steagall, pretty good. Are you still using AOL? Well, you know what? Do I actually have that? Yes, I got mail.
I got mail! Yay! I got mail! Yay!
Yes, I've got mail. Oh, I see. Someone sent something to me. So I wanted to check that out. Anyway, you can give us a call, 877-927-6648. And, of course, email me at path@tfnn.com. You can also, of course, put a message in the den. But if you're wondering why everybody got a little nervous out here today and why we're flirting around these levels, the market was ready to pull back already. There's nothing new to Powell talking about this rule. The difference was the way he framed it back in November during his hearings to become the head of the Fed, compared to today's, which seemed a little bit more vigorous. And in between the arguments with the morons of the hearing, there was a couple of people in there. I don't know if anybody remembers it, but there was a handful of years ago, maybe 5 or 7 years ago, they were having a hearing. You can find it on YouTube. But one of the House members was talking to them about Okinawa, and he thought that if we shipped more Marines to Okinawa, that the little island couldn't carry itself and would flip over with the extra weight of the Marines on the island. Well, it was worse today. They had some people in there that are living brain donors, but You know, I always figured these guys should get paid a little extra to talk to Congress. But in between all those insane ideas and missing reality, how about this rejecting reality and coming up with their own in their speeches? He did get to this issue of the Volcker rule. Think everybody should start thinking about it a lot harder. He sounded fairly emphatic today about it, and I think that's what really got everybody a little bit going here today. But the market was ready to go. We'll show the charts that make me think that when we return after this. I will be, yeah, he was a congressman from Georgia. There's another one out there, Maxine Waters, that put him to shame today. But well, you never know. We'll be back in a minute.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Usually I don't spend a lot of time on options until the last 7-8 days of options expiration for the monthly options. But I've been working on updating my options software that I wrote and changing the data source. And I was going through just a ton of them last night. I knew that the market looked fairly weak. There were a lot of stocks out here on my naughty list that needed to be spanked. Like MasterCard out here is one. 177.11, the February 2nd high, had just under 7 million shares. Yesterday we had 4 million shares. Today we got 2 million shares. So a lot of these things are parking fairly close to the highs. So I looked at Micron yesterday. This thing's coming to this gap down where this thing is at, 80 million shares on the gap down of the 29th of November. This thing's working its way back up here. 33 million shares so far. So it's getting into that area. It's a little tough. This isn't the weakest stock, but certainly when we look at the Power Law Vector indicator number, this February 9th low or the February 5th low, depends on which stock you're looking at, had basically pierced the previous lows, now back up. But the energy off that low up to these highs just hasn't been much. And certainly we're going to be probably a little short in Micron and a handful of others. So I started looking at these options on them. And if it would have just been Micron, it wouldn't have been that much. But I went through 100 of these things, maybe more, 150 last night, as I was working on this program to show them. And the option curves, what they call the skew or the smile, a lot of times I look at it a little slightly different way because I'm looking for an indication, not what I should pay for them. But everything kind of looks just like this. We're, pushing 48 to 50 on these, and options basically are showing something like, 45 would probably be a lot more reasonable. These may track up a little bit, but just about everything I was out here looking at, that was Micron. What else do we have? Here's the SPYs. Same thing with it. Oh, let's go to the SPX actually. There we go. Now, when I look at these options, what they tell us is that everybody has an idea that the floor comes in at 2,600. But, 2,700 certainly wouldn't be a lot of difference. Let me zoom in here for you all. 2,700 wouldn't be a lot of difference. Just maybe 2,680 wouldn't be a lot of difference between that and 2,600. So it looks to me where it really starts coming up is about 2,700. That generally gives you an indication that these guys think that this thing is probably going to expire maybe at the high side of 2,700 and maybe at the low side of 2,600. So we still have a ways to go. This V will sharpen up and show us a lot closer as we get to expiration. But when I look at the markets and then I look at 100 NASDAQ stocks and I look at my charts for the sectors, I mean, we're at highs. We've been hammering these highs up here for a little while. That's okay. What do I want? I want this. There we go. Okay. Oh, to my subscribers, I've added in the daily newsletter, I've added one more sector from a request this morning about the defense ETF. So that will be starting in tomorrow's newsletter. I put it together this morning. But another one where kind of testing these highs. Again, you're back up at highs. You pretty much need to be thinking when everybody is long the stocks, probably a good time to figure out whether or not you want to start a pullback. When everybody's throwing them away like they were in the defense sector at the 1st of February, you got a little retest out here. That's the time to start thinking about buying. Could these go higher? They could, but I don't suspect. I've got so many of these out here that are acting like there is a fairly decent high, and a few of these things are starting to slip back under the 9-day moving average. If you're new to my sector oscillator charts, just think of them as putting together all the 9 days of a particular sector and see how many are above and below that 9-day average. There's a little more to this than that, but you can kind of ignore everything in that gray area. But when these things are down at the min and the max levels where everybody's in and everybody's out of all the stocks in a sector, probably a pretty good sign that these things are finding some highs. The internet sector certainly looked like, even though this thing was going on, a few more stocks continued to fall below the 9-day over the last, well, let's call it 7 trading days. And you're probably going to find some kind of support in here. But this is not a market getting stronger with more stocks going higher and above that 9-day trend. It's actually a stock with a few of them starting to fall by the wayside now, and that's setting up some stuff. Now, when we look at this one, which is PNQI, let's go out here. Okay. Dave, can it not just be protection? And the answer is no. It can be protection, but basically the way option market makers make money is those options have to go unexpired. So what you do, it's the same thing as going to a horse race. The odds are going to be set correctly 85% of the time. And exactly the same thing. They've got to shift the amount of money around to make sure that both sides lose, and they keep as much of the money as possible. Right now, they would be horrifically huge losers if we expired right here and right now on those. So yes, but that's not the way. These things work. Think about a hurricane coming through and the insurance companies. Yes, the insurance companies got the money for a number of years, but if the storm comes through, they all have to pay out. And so the people, it's not like an insurance company where you can see a storm coming and you do nothing. Options are different. The option market makers can start trying to buy back stuff if it looks like it's going against them. They will actually start selling a lot of calls if they think the market's coming back. If they think the market's going higher, they try to sell as many puts as possible to try to maximize the amount. So I guess the difference is that as things change, they will show you their hand, and that's what I see in options out here. They are thinking that market's moving lower across the next couple of weeks.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks! Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
The Taz Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the Taz Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the Taz Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profiles So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the Taz Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
And we've had kind of an interesting discussion in the den during the break, but one was, do I do the NASDAQ 100? And the answer is no. The reason why is that the NASDAQ doesn't track anything close to what it should, because 5 stocks are 56% of the index. And so it's a meaningless index. I think you'd be better off just forming your own index of the 5 or 6 top stocks in it. So it's just, you're not going to get anything close. So I don't do that. I do some of the bigger ones like the IWM, the S&P, all the ETF series. But I'm going to kind of give you just a preview because I've got the charts up and working now. But my theory has been that when we bounced off of 89 on the U.S. dollar index, that we were in a trading range between that 89 and 92. I suspect what we're going to do is go up and bounce off of 92, and that's probably going to put a little bit of hurt in these international companies, and why the IWM is probably doing just a little bit better, because most of the sales of IWM companies are in the United States, where the big cap company multinationals are doing it. That is a theory. I don't have any facts to back it up. But I do think that we're trading 90.25 on the dollar index right now. To me, a pullback in the market led by the giant multinationals and internets wouldn't be a big thing. Doesn't break an uptrend, but just kind of lets us work off the excesses to the downside and the upside. We really had a sharp bottom down. What was it, 2 weeks ago on Friday? Was it 3 weeks ago? Yeah. When I was pretty sure that we'd made a bottom, the option market makers were going to the hilt that they thought that it was at least going to 2,700, if not higher. I thought maybe 2,750 a couple of days after expiration. It got there at expiration. But what can you see in this? And that, to me, the dollar index is always, and there's two things that move small caps and mid caps against large caps, and that's the availability of cash. And when things look like cash is going to be tough, the IWM heads south in a hurry. The other thing is when the dollar starts to fall, these guys are, for the most part, net importers, and small caps get hurt a little bit more. The international companies are the ones that get hurt the most when that comes back. Exporters are actually helped, right, by the lower dollar. And that's why you're always going to have this yin and yang as those go through. But to me, I think that there's a pretty good chance when we look at that dollar that 92 area is going to get hit. We did get down to the lows of 116.5 on the TLT. Let's take a quick look at that. Because this is kind of my theory right now. And that was the TLT bounced. It bounced without much juice. We still need to come down there and test this 115.98, the March 13th low. So I'm thinking the way that market's acting, it is correct that we're going to go test the basically 116. There's also a little farther one around 115.49, which is the December 14th, 2016 low in the TLT. But if you're not a big bond aficionado, which I am not, and we start looking at these, it's a lot easier to see that this thing is getting awful close to that low. And I think it's going to get sucked in like a magnet to at least test it. But between a dollar going slightly higher, we're seeing the effects of that, of course, in the gold market today. It's off 13 bucks. The dollar's up. It's into the 90s. It looks to me like that 89 to 92 range in the dollar index is kind of where we're going to be living here, maybe for a while. The government seems to step in and goose the market anytime the TLT looks like it's going to hit that 116, and or when it looks like the dollar's going to fall out of bed down there at 89. So I think we can see what market participants for hundreds of years have called the invisible hand in the market. And that's where the Treasury and the Fed get together to kind of gently diddle with the market. Anyway, we're off 22 points on the S&P cash. I'm thinking that 2680 on the S&P kind of makes me think that from looking at all the charts last night, that's where we'd be looking at these. So it's not that far down. It's a nice little pullback. And, it'd be nice to pull back, get a little bit of the excesses out of the market. I see far too many people trying to hit home runs on stocks on the long side, and a few of those have rolled today. So I'm kind of seeing the characteristic of the market changed a little bit. I could see people selling into fund buying this year. In the next few days. Nice to have a place where you can actually sell stock, and then maybe see that 2680 to 20, maybe even 20, maybe in the low 2600s, and then maybe bounce back up for expiration to 2700 or 2680. Get everybody kind of at least a little bit of the mania out of it that we got. Everybody should be thinking a little bit about that downtrend. And it's like it's never happened. Everybody went right back to business as usual, and you didn't really get the consolidation that normally should happen after a big move like that. And I just think that's kind of where we're at. We're going to do a little consolidation. We're going to get ready. And then maybe that late March, April time frame is going to be where the market runs back up and probably makes new highs if everything keeps going the way it does. Anyway, you can give me a call at 877-927-6648. You can email me at path@tfnn.com. And we'll just go through some of these other ones here. I will be in the 5 o'clock hour, or excuse me, the 4 o'clock hour for Tom O'Brien. We'll be talking about a few more of these stocks that I'm looking at. But again, not uncommon to see a lot of stocks testing previous highs. I said on my naughty list where they needed to be spanked. Nike, a pretty good example of a top in this. January 31st, we had 11 million shares at 68.83. Yesterday, you went through that with 6.5 million shares. So not quite half, but pretty close to half. Today, we went to $70.25. We've got a nice engulfing candle for Nike. And maybe part of that is the Olympics didn't do that much. I think all the data I've seen is that it's the least watched, least involved in. So maybe all the money they threw at that probably not going to do them as much as they thought it would. Anyway, pretty much a bearish engulfing on Nike. We've got a few others to look at.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
You don't buy into that nonsense, do you? You know you can't time the markets. I didn't. And in 2006, I set out on a mission to do just that. I began by surrounding myself with the greats like Tom O'Brien, Larry Pesavento, David White, and Basil Chapman. I read countless books and even looked to the moon and planets for answers. Now, we both know that trading is 80% mental. So I learned the exact tools that Tony Robbins uses to overcome fear. I'm Steve Rhodes, author of Mastering Probability. And last March, the folks at Timers Digest began tracking my newsletter signals, which through January 18, 2018, placed me as the #1 gold timer for that exact time frame. Now, I can't officially be recognized until Timers Digest has a full year of signals, but clearly I've learned how to time the markets, and I'd like to teach you how to do that as well. Subscribers to Mastering Probability gain access to my live and archive workshops where I show you the exact same patterns that earn me this #1 ranking. If you're looking for great market calls and an education, sign up for Mastering Probability today at TFNN.com.
Catch Tom O'Brien, professional trader and educator, founder of TFNN. Also, a special guest on CNBC. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
And AutoZone gets the loser horn out here. This actually came back a great deal after Amazon said that they were getting into the auto parts store, made a new high. Has come off of that here from that, that January 19th high, now breaking through the February 9th low with some gusto. You know, I never heard that word other than a beer commercial. Anyway, gusto. Certainly today, 1.4 million shares compared to the 900,000 shares out here in February 9th. And so, you know, we've got a few things moving out here that basically are showing some weakness. One of the other ones out here that actually got smacked fairly hard is AKRX, and that's Acorn. This thing totally fell out of bed, 33% down or more. What is it? 37%, 38%. So a bad hair day out there for those folks. Just, you never know about some of these things, but you start seeing a handful of these blow-ups, and you know normally that you're ready for kind of a pullback in the market. Everybody's just a little bit too much, they took the rear view mirror and they threw it out the window. But we need to kind of think about now, especially now, where everything was on the way back down, because those are going to be the levels of support. And I suspect one place where I will be buying the market again, but I think I'll be short here for a little while, probably into the mid part of March, and we'll look at that. Anyway, volumes continue to be strong on the way down. They were light the last few days as we tried to get back up into the highs. And I think that's all you really need to know about that. Options continue to show weakness for the next few weeks. I'll let you know if that changes. You can always give me a call tonight in Tom O'Brien's hour at the 4 o'clock hour. In the meantime, sell when you can, not when you have to. And we'll see you here tomorrow. Same bat channel, same bat time.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.